Hey, what is going on, tycoons? Super excited for today's video. Gonna break down KDA. This one was a viewer request, which I do those every single week. So make sure to comment down below if there's any tickers you would like me to break down for you. Smash the like button if you enjoy anything in this video and learn something new, and subscribe to the channel if you like the content, because I'll be making 5 to 15 videos just like this one every single week. And you can look forward to those and hopefully learning something new each time you watch the videos, right? So the first thing we're going to highlight in this one is going to be divergence, and it's going to be a divergence between the token price and the relative strength index. You can have a bullish divergence or a bearish divergence, and they're good indicators at some future activity, whether it's going to be bullish or bearish. Okay, so to spot it, right, in this case, what we're looking at is a low, then a lower low. If we look at the relative strength index, we have a low here and a higher low here. So the token is dropping in price, but actually the strength of this token is increasing. So that's an indicator you may see some bullish activity. We already had a pretty nice rally, off of that divergence. We ran up about 23%. Now there's three major resistance levels that we're battling right now, and we have to take these out. Okay, it's the 38.2, the 50%, and the 61.8% retracement levels using the fib tool. Okay, that's this tool right here. So what you do is you take your swing high to your swing low, and what we're going to do, and we'll see, is that nothing moves in a straight line. It retraces, and then it either continues the trend, okay? So if we hold these three resistance levels as resistance and we're unable to break through them and push higher, then we're going to have continuation of this downtrend, right? So we have some bearish price targets to the downside right here, just in case, we do get our rejection here at our retracement levels. But if we break past these, right, and we're able to go past them and break these as resistance, we're going to look and see if we can start a new trend, right? To do that, we would have to make a high and then a higher high. All right, that would be the first step to starting a new trend. Okay, but for right now, what we're doing is, we're battling our retracement levels. If we are able to break through there, okay, we have resistance at 1.75. That's going to be our breakout level. And above there, we have a bullish price target of 1.9 and then 2.09. All right. Now, if you want to see some, examples of this stuff working and how they played out in the past, what we'll do is we'll actually come over here towards the beginning of the chart, okay? And we'll go over those, all right? We'll give you guys some examples of all this stuff and how it worked. Here we can see that in the beginning, right, we had a nice bullish divergence. We had a downtrend line. Token is dropping in price, but the relative strength of this token was increasing nicely, right? So higher lows on the relative strength index, lower lows on the token price ended up leading to a very, very massive rally, right? I mean, if you take the lows right here, that right there is almost 200%, and this thing went up hundreds and hundreds of percent afterwards. But I wouldn't say that it was all just based off of that bullish divergence, but this bullish divergence gave us the nice pop that we needed to create this chart pattern here known as a bull flag, right? And so what you have here is you have your flag pole, you have the very sharp move to the upside, and then you have this consolidation channel right here, right, where it's pulling back and it's absorbing some of the price action of this recent move. We get a nice breakout of our flag, right? So here's the flag pole, here's the flag. We get a strong breakout, continue that uptrend. And here we can take a look at how we were looking at retracement levels earlier for resistance, right? To see if we're going to continue the downtrend. What we're doing here is we're looking at retracement levels for support, right? And so we take our low up to the high, we come down, we retrace, and then we continue up higher, right? And we hold these three levels, the 38.2, the 50%, and the 61.8% level. Take a look, we basically just continue doing that, right? So we come down, we retrace to these three levels, like I just said, okay? And then we take our swing low to the swing high right here. We come up, we retrace, hold these three levels right here, all right? And we do the same thing. We take this swing low up to this swing high, we retrace, hold those three levels, and continue pushing higher. So it's a very easy and simple way, once you learn how to do it, to tell whether something is retracing and doing a healthy retracement to continue a trend either to the upside or the downside, or whether or not we're going to be breaking those levels and looking to reverse the trend, right? If we would have broke through these levels, we would have came back down and started possibly a reversal, but we don't get that, right? We have
three valid examples of retracement and holding the three major retracement levels and then continuing the trend. Okay. After that, we end up forming another bull flag, right? A very, very big bull flag here, get a strong breakout to the upside. And what we can do now is we can look at how it's used as resistance, right? So that was three examples of using it as a valid support level for a retracement. What we're doing is taking the swing high, down to the swing low right here. And we're saying that we come down, we retrace, we get rejected at our 38.2 retracement level, and then we continue the trend, right? So now we're in a downtrend. We're retracing, doing healthy retracements, rejecting back down. Okay. Then if we take our swing high to our swing low again, from over here, right? This high, okay, down to this low, we see we come down, we retrace, we hit our three levels right here. We get rejected at the 50% level, and then we continue our downtrend. Okay. So that's why it's really important to look at these and to use some of these tools for yourself. And that's why if we zoom back here to the beginning of the chart, that's why these three levels right here are very, very important. Okay. If we can break through them, all right. If we can break through these and invalidate them, then we have the potential to come up here to our breakout level. But otherwise, especially right now, we are facing resistance at our 61.8, 50%, and 38.2% retracement levels of this downtrend. And if that's going to continue, then we're just going to come back down here, retest these lows. And if we break those lows, we have some bearish price targets down here of 1.13 and 1.04. Okay. So that's it for today's video. Don't forget to smash the like button and subscribe to the channel if you enjoyed any of this content in the video. And don't forget as well that I do those viewer requests every week. This was one of them. So if you want to see your own ticker analyzed, broken down, see if maybe there's any divergences or maybe what some of the major resistance or support retracement levels are that we're looking at currently, make sure to let me know in the comments below. And if you made it this far in the video and enjoyed it, you're really going to enjoy one of these next videos.